Hey guys, long time no see. I heard that you guys have missed me, so just as Robert has promised, I'm back. Welcome to the 7th episode of Kanga News, where I'm going to present you with the latest news from the world of cryptocurrencies. Please remember to subscribe to our channel, like the episode, and click the bell button so you won't miss out on any news from the world of crypto. Let's start with the news about SEC and ETFs on Ethereum because it's an important topic which significantly influences the world of cryptocurrencies. Greyscale withdraws its Ethereum Futures ETF application. The withdrawal comes a little bit over 2 weeks before the United States securities regulator is forced to make a decision on at least one spot Ether ETF application. Greyscale has withdrawn its application for an Ether Futures Exchange-Traded Fund ETF just 3 weeks before the securities regulator is forced to decide on it. The cryptocurrency asset manager filed a notice of withdrawal for the Greyscale Ethereum Futures Trust with the United States Securities and Exchange Commission (SEC) on May 7th. The SEC was scheduled to decide on Greyscale's Ether Futures ETF on May 30th. Greyscale initially filed its application for an Ether Futures ETF of September 19, 2023, which would have been listed on the New York Stock Exchange had it been approved. Bloomberg ETF analyst James A. Ford initially believed that Greyscale planned to strategically use its Ether Futures ETF as a Trojan horse to corner the SEC into approving its spot Ether ETF. However, he expressed confusion as to why Greyscale would withdraw now when the SEC will be forced to make a decision to approve or deny at least one spot Ether ETF application on May 23rd, a little over 2 weeks away. For several months, Ford and fellow Bloomberg ETF analyst Eric Balchunas have held a 25% chance that spot Ether ETF will be approved on May 23rd, down from 70% in January. Greyscale's withdrawal didn't seem to impact these odds. Ford claims there's now no way for Greyscale to sue should the SEC not back its spot Ether ETF application. That said, comments from SEC Chair Gary Gensler in May 7th interview with CNBC suggest that SEC is still weighing up its decision on the spot Ether ETF applications. Meanwhile, Bitcoin ETFs are developing. Let's look at one of the recent events. A monster whale boost with $1.2 billion ETF purchase. Susquehanna International Group, a behemoth in asset management with a trading volume handling numerous financial products globally, has made a substantial investment in Bitcoin through various exchange-traded funds. A disclosure to the Securities and Exchange Commission on May 7th revealed that Susquehanna held approximately $1.2 billion in spot ETFs during the first quarter of 2024. The details of the investment are particularly notable for their scale and diversity. Susquehanna now holds over 17 million shares in the Greyscale Bitcoin Trust (GBTC), which alone is worth approximately $1.0 billion as of March 31, 2024. This single investment represents a significant portion of the entire BTC investment, indicating Susquehanna's preference for Greyscale due to its high liquidity. Further diversification in Susquehanna's holding includes almost 1.35 million shares of Fidelity's spot Bitcoin ETF, FBTC, valued at roughly $83.74 million. In addition, the firm has significantly increased its stake in ProShares Bitcoin Strategy ETF, BITO, which offer exposure to BTC future contracts. Susquehanna's owned over 7.9 million shares of BITO as of the same date, valued at approximately $255.42 million, as represented a 57.59% increase from a February filing that listed over 5 million shares. Let's talk about Hong Kong now. Over there, the situation with ETFs is still uncertain. We can see first outflows since the launch. The outflows solely came from China AMC, which saw 75.36 BTC leave the product on Monday. Hong Kong's Bitcoin ETFs experienced their first setback after launching on April 30th, following their first cumulative daily BTC outflows on Monday. The outflow came from the China Asset Management Bitcoin ETF, while the other Hong Kong-based products had no flows. According to Farsight data, the China AMC Bitcoin ETF saw an outflow of $4.9 million on Monday. In contrast, the other Bitcoin and Ethereum ETFs in Hong Kong reported zero flows, apart from Bosera Ethereum ETF, which saw $3.2 million in inflow on Monday. Following their launch last week, the three Hong Kong's Bitcoin ETFs amassed $262 million in assets under management AUM with their first week. Despite these significant AUM figures, the asset inflows for Hong Kong's Bitcoin and Ethereum ETFs amounted to less than $14 million during their first launch week. This figure pales compared to the billions of dollars that flowed into US spot Bitcoin ETFs back in January. Meanwhile, the Hong Kong spot Ethereum ETFs, the world's first of their kind, did not make a significant impact, with a combined $54.2 million in AUM and total inflows of $9.3 million as of May 6th. Despite the underwhelming performance of Hong Kong spot ETFs, Bitcoin experienced a weekend surge, now trading close to $63,000, up from below $57,000 last week. Senior Bloomberg ETF analyst Eric Balchunas has advised investors not to expect substantial numbers in Hong Kong compared to the US market. He explained that the $310 million AUM of the Hong Kong ETFs is equivalent to $50 billion in the US market. Therefore, these ETFs are already substantial in their local market, as US ones are in theirs. The Hong Kong equity sector is relatively small, with a total market cap of $4.5 trillion compared to the $50 trillion worth listed of equities across the US exchanges. In addition, the Hong Kong equities sector faces liquidity challenges due to the slower economic growth in mainland China since 2022. Another thing that points to the relevance of ETFs is the point of view as expressed by the well-known in the world of cryptocurrencies, Michael Saylor. In an interview with journalist Natalie Brunell, Michael Saylor, executive chairman and co-founder of MicroStrategy, laid out its vision for what could next propel the price of Bitcoin. His insights come at a time when the digital currency landscape is experiencing pivotal regulatory and institutional developments. Saylor pinpointed the specific moment he believes heralded the onset of a new era for Bitcoin. January of 2024 marked the beginning of the period of corporate adoption of Bitcoin, he stated. The significance of this shift, according to Saylor, is tied closely to regulatory approvals and the distinctive path Bitcoin is carving for itself amidst the sea of digital assets. The crux of Saylor's argument is the US Securities and Exchange Commission's decision-making process regarding cryptocurrency spot exchange-traded funds ETFs. He described the SEC's approval of Bitcoin spot ETFs as the first big catalyst. This regulatory nod not only legitimizes Bitcoin in the eyes of institutional investors, but also enhances its appeal as a viable corporate treasury asset. Now, Saylor argues that the next decisive moment will hinge on SEC's handling of other cryptocurrencies. The second big catalyst will be the SEC's denial of every other crypto application for spot ETFs, Saylor explained. By denying these applications, the SEC would effectively position Bitcoin as the premier unreplicated choice among cryptocurrencies, an outcome Saylor sees as critical for dispelling doubts about Bitcoin's long-term viability and uniqueness. Do you agree that ETFs are going to play such a significant role? What do you think? How is it going to influence the price of Bitcoin? Please share your opinions in the comments section. We couldn't go without mentioning the FDX group, which has filed for bankruptcy on November 11, 2022. Now, they are planning to pay billions more to creditors for compensation. FTX planned to give 98% of its creditors at least 118% of allowed claims, the bankrupt exchange said in its reorganizational plan released Tuesday. Other creditors will receive full repayment and billions more in compensation for the time value of their investments, the company said. We are pleased to be in a position to propose a Chapter 11 plan that compensates the return of 100% of bankruptcy claim amounts plus interest for non-governmental creditors, FDX CEO John J. Ray III said in the release. The latest reorganization plan aims for a centralized distribution for FTX customers and creditors affected by the company's collapse in 2022, regardless of where their assets were situated. FTX estimated the total value of cash available for distribution to be between $14.5 billion and $16.3 billion, while the plan has yet to be finalized and approved by the U.S. Bankruptcy Court. Creditors with allowed claims below $50,000 will be eligible for the 118% compensation upon court approval, according to the plan. FTX's proposal scheduled the repayment to occur within 60 days after the plan's effective date. Revolut Crypto Exchange goes live for experienced traders. London-based Revolut, which has more than 40 million customers worldwide, has developed Revolut X to compete with leading crypto exchanges. Digital bank Revolut's crypto exchange Revolut X is now available to professional cryptocurrency traders. London-based Revolut, which has more than 40 million customers worldwide, has developed Revolut X to compete with leading cryptocurrency exchanges. Having allowed the buying and selling of crypto within its app for several years, Revolut told customers in February that it was set to introduce an exchange. The standalone exchange is designed to entice users to trade through it rather than buying and selling with the Revolut app by offering lower fees. Revolut will charge zero fees to the maker of the trade and 0.09% to the taker, according to an emailed announcement on Tuesday. While some banks offer cryptocurrency trading to customers in some form, Revolut is among the first to build a standalone crypto exchange for its purpose. The development of banks in the direction of cryptocurrencies is definitely a happy news, but they will never offer all of the benefits that you get in the DeFi world. So I invite you to use Kanga, where you can safely and easily trade in cryptocurrencies. And we are open not only to experienced traders, but to everyone. And at the end, let's talk about the halving effect and the likely decrease in the difficulty of mining in the near future. Just over 2 weeks have passed since the fourth Bitcoin halving took place. During this period, the network's hash price dropped from over $100 per petahash to below $45 at the beginning of May. It has since increased to $50 per petahash. Despite the modest rebound, the network's total hash rate has experienced a decrease with a reduction of about 50 exahash since the halving event. This weekend, Bitcoin's total hash rate is maintaining levels around 600 exahash per second, occasionally fluctuating slightly below and above this mark. This decline follows the all-time high in hash rate that occurred just before the fourth reward halving in April 19, 2024, when it peaked at 655 exahash per second. The decline in hash rate has led to lengthier block intervals, which could result in a difficulty reduction on May 8, 2024. Projections suggest a potential 3.4 decrease in difficulty at the next retarget. Following the halving, the block subsidy decreased from 6.25 BTC to 3.125 BTC. Since then, the average fees per block have been around 0.90 BTC to 1.01 BTC. Should the price fail to increase, we might witness further reductions in the hash rate. Conversely, BTC miners have mitigated some risks by updating their equipment to more efficient models. Enhanced joules per terahash and elevated revenues during March and April may provide a substantial financial cushion for those operations. Looking ahead, the potential difficulty reduction could help recalibrate operations, influencing miner profitability in this new subsidy era. Would you like to know more about ETFs and the world of cryptocurrencies? Are you interested in the mechanism of halving? Go to Kanga University, which is a vast collection of knowledge about cryptocurrencies for beginner, intermediate, and advanced investors. That was the 7th episode of Kanga News. Thank you so much for listening and stay tuned for more. Remember to subscribe to our channel, like the episode, and I'll see you in the next episode. Bye!
We are Kanga, beyond crypto.